What if I told you there is a tiny semiconductor stock trading around $3 that is already up 180% this year, but still has a market cap under $300 million? Unlike a lot of small cap chip stocks that are just riding the AI hype, this company is actually starting to ship real 5G chipsets, has partnerships tied to satellite connectivity, private networks, and even air to ground broadband. This company is GCT Semiconductor, ticker symbol GCTS. I called this stock out just 3 weeks ago as one of my top penny stocks for May. GCTS is up more than 110% since that video. That's over 100% in just 3 weeks. But is GCT Semiconductor still a hidden 5G and satellite chip opportunity, or has the easy money already been made? In this video, I want to break down exactly what the company does, why the stock has suddenly caught investors' attention, the latest earnings report, the biggest catalysts for 2026, and the risks that investors absolutely need to understand. As always, this video is for educational purposes. I'm not a financial advisor, and this is not financial advice, so let's get straight into it. So first, what exactly is GCT Semiconductor? GCT is a fabless semiconductor company. That means they design the chips. They do not manufacture them. They focus on wireless communication chips, especially 4G Lite, 5G, and NTN, which stands for non-terrestrial networks, basically satellite-related connectivity. This is important because GCT is not trying to be Nvidia. They are not building GPUs for AI data centers. They are not directly competing with Nvidia, AMD, or Broadcom in the way that most people think about semiconductors. GCT is more of a connectivity chip company. Their chips are used in things like routers, mobile hotspots, fixed wireless access devices, industrial devices, and potentially satellite connected equipment. So the simple way to think about GCT is that as more devices are needed to connect to 5G or connect to satellite networks, those devices need chipsets that allow them to communicate. This is where GCT is trying to position itself. And that's why the stock has become so interesting, because if the company can successfully transition from legacy 4G products into higher value 5G products, the revenue profile of this company could look very different in the next few years. Now, I will look at the company's financials a little later in the video, but in fact, in their own 10Q filing, GCT said it expects the average selling price of its 5G chipset to be approximately 4 times that of its 4G chipset. That is a massive part of the bull case here, because if 5G volumes ramp up and those chips sell at much higher prices, then revenue and margins could potentially move much faster than they did in the old 4G business. Now, the big opportunity here is not just 5G in a broad sense. The real story is around a few specific markets. First, you have the fixed wireless access, where 5G is used to deliver broadband internet without fiber or cable. Second, you have the industrial Internet of Things, where factories, utilities, and critical infrastructure need reliable private wireless networks. And third, you have the most exciting narrative right now: satellites and non-terrestrial networks. This is where the story gets much more interesting because GCT has announced multiple satellite-related developments. In January 2026, the company announced a licensing agreement with one of the world's largest satellite communications providers. The agreement allows that provider to integrate GCT's 4G and 5G chips into next-generation user equipment. And GCT said that shipments supporting that initiative are expecting to begin as early as the second half of 2026. So straight away, there is a catalyst coming in the second half of this year. Then in February 2026, GCT announced a partnership with Skylo to help expand satellite connectivity for next-generation cellular IoT devices. Skylo's network spans 36 countries and more than 70 million square kilometers of coverage. So the bull case is pretty clear. If satellite connections, private 5G networks, and Internet of Things devices continues growing, GCT could be sitting in a very attractive niche. But again, this is very early. This is not a company doing hundreds of millions in revenue today. This is a company trying to ramp up massively in 2026 and beyond. Now let's look at the latest earnings report because this is one of the biggest reasons the stock has caught attention. For Q1 2026, GCT reported revenue of 1.92 million, up from just 496 in the same quarter last year. That is a year-over-year increase of about 287%, which sounds amazing, and percentage-wise it really is. But this is still tiny. We're talking about under $2 million of revenue for a publicly traded semiconductor company. The most important part, in my opinion, is the shipment growth. GCT said 5G chipset shipments increased 58% sequentially to 3,000 units in Q1 2026. Management said this signals the early commercial ramp-up, and they expect sequential growth in 5G shipments throughout 2026. And that is the key sentence. The company is not being valued on what it is today. It's being valued on what investors think it could become if those shipments continue ramping up. Gross margin also improved massively. Gross margin was 49% in Q1 compared to 17% in Q1 2025. That matters because if revenue increases like expected, then having a 50% gross margin would be incredible. But this is where we need to talk about the risk. Even with the revenue growth, GCT still reported a net loss of around 9.9 million. For the quarter, operating expenses were about 7.1 million, and the company had 7.2 million in cash and cash equivalents at the end of March. This is not a profitable semiconductor company. This is not a cash machine. This is not a company trying to scale before liquidity becomes a bigger issue. And in the 10Q, GCT even stated that it believes it can secure additional capital over the next 12 months. This is not something investors should ignore. So the earnings report was good, but it's not risk-free. The good news is revenue is moving in the right direction. 5G shipments are ramping up and margins are improving. The bad news is that revenue is still very small, losses are still very high, and the company may need funding. But what do Wall Street analysts think about GCTS? According to MarketBeat, GCT has a rating of hold based on 4 analyst ratings. 2 say buy and 2 say sell. The average price target is $3.50. But the stock is due for analyst revisions because this stock was closer to $1 when those analyst targets suggested massive upside, while the stock has more than doubled since then, because there has been some great news since these analyst forecasts were set, and the story for this company is improving all the time. So this is what I'm watching for next. There are 4 big things. First, 5G shipments. They went from 1,900 units in Q4 to 3,000 units in Q1. That number needs to keep increasing. Second is revenue growth. Revenue needs to move beyond 1 or 2 million per quarter. Then the margins need to keep improving too, and those losses need to start decreasing. If that doesn't happen, then this is not a viable business. It really is as simple as that. Third are the satellite shipments. Management has pointed to the second half of 2026 for initial 5G shipments tied to the satellite opportunity. That could be a major catalyst. And fourth is cash and dilution. This is the most important risk. If GCT can ramp up revenue without heavily diluting shareholders, the stock remains very interesting. But if the company needs to raise a lot of money before revenue arises, that could put pressure on the stock. Their balance sheet at March 31st was not the best. Liabilities far outweighed assets, and they had only $7 million in cash. When we look at the statement of operations, although we can see that revenue has improved, we can also see that there has been dilution of about 20 million shares from the prior year, up from 47 million to 66 million. This 10Q was for the period ending 31st of March, and this was released on May 12th. But as of May 11th, they had already increased the share count from 66 million up to 83 million shares, which means they have already brought in an additional $80 or $90 million in the past 2 months. Now, I do think that GCTS has a real chance of going up a lot, but we need to remember that if management are willing to dilute at $1 a share, which is what the price has been over the last few months, then they are definitely willing to dilute at $5 or $6 a share. So for me, GCT could be great, but it is high risk, high reward. And you need to keep an eye on developments, whether that's the latest news or just the latest SEC filings. This is a stock you need to watch very closely. So let me know in the comments what you think of this company. Is GCT Semiconductor one of the most undervalued 5G and satellite chip stocks on the market right now, or are the risks too big? As always, I'm not a financial advisor and this is not financial advice, so make sure you do your own research and I'll see you in the next one.